Hi, my name is Robin. Welcome back to this week edition of RHO Market Chat. If you have joined me last week, I hope you enjoyed the session. Let's do a little recap. Well, last week I said that investors and traders should not be surprised by the current fierce market rebound, and that is because we have seen it before. We've seen it during the 2008 global financial crisis and also during the Great Depression. So we have a market rebound right now, and I believe that this rebound is a phase in an overall bear market. And this rebound could last for a couple of months. So I showed this trade plan, and I said that, well, you should be buying when it hits the support at 22,855 and selling when it's close to 24,700. So last Monday, when I was talking or speaking in this chat, Dow Jones was doing quite close to the high, and came Thursday, it had a sharp fall. It fell to a low of 22,780. Well, I bought it as planned. I went long on Dow Jones at 22,850. Well, made 400 points before 12 o'clock. I bought it around about 12 o'clock in the midnight. I remember was already making 300 to 400 points. But lo and behold, when I woke up in the morning, I saw how it closed. It closed almost 1,000 points from where I bought. So it was a day of fierce rebound. The market rebound from the low to the high, and the range was about 900 to 1,000 points. Well, S&P similarly, according to my plan here, trade along this support resistance line. And my support resistance line here, 2760, the S&P went to a low of 2763. So missed it by 3 points, but we were very close. And the STI, my prediction was 2511. It went to a low of 2516, and that was pretty close too. And also I explained that the current rally really is led by the FANG stock. And the current market leader is the technology big tech stocks. And the reason why the FANG stock has been the current market leader is because the FANGs made up a large part of the Nasdaq index. In fact, the FANG made 49% of the constituents stocks in the Nasdaq index. Today, I'm going to talk about the escalating US-China tension and the outlook for gold. Well, these two charts tell us why the market has been strong lately. And the number of new cases and deaths in the US is slowly declining. They are even opening up their economy again. And this week, we'll see a lot of business open in the US, especially the automakers. General Motors, Ford, Tesla, they are opening the production line again, and the market seems to be optimistic of what is going to happen. And the market is clearly looking forward to a rebound in the business activity in US. And looking at the chart of China, China being the epicenter of the virus, all right, today it is seeing even the single digit of new cases, and that is why the market has been optimistic. But lately, we have seen the escalating of US-China tension again. Well, the Trump administration stepped up its campaign of blaming China to the deadly coronavirus pandemic, with a top 8 even suggesting that Beijing send an airline or an airline passenger plane to spread the infection worldwide. Well, believe it or not, this is what is reported today, and more hostile actions coming out of from US. Just today, we heard of how US has further banned Huawei. The US Commerce Department amended the direct product rule in order to restrict Huawei's ability to use US technology software to design, manufacture semis abroad. So what it really means is that anybody or any manufacturer that is using US technology to support Huawei or to sell equipment to Huawei is banned or must apply a license to the US to do so. And the ban are targeted at disrupting Huawei's chip design capacity, chip manufacturing, and testing facilities. Well, companies adversely affected by this saga is SMIC, Hikvision, TSMC, and AAC Tech. And that is why today we see these companies are falling by 2 to 8%. And also, China, in response to US ban on Huawei, has threatened to retaliate. And that is why today we saw the Apple supply chain, or the company in the Apple supply chain affected in the market today. We saw in Hong Kong, all right, AAC Tech falling by about 5%, Sunny Optical doing badly too, BYD Electronics, and even mainland companies like Gotek, Lens Technology, Oflim Group, Shenzhen Sunway, all right, they all saw their prices slumping 5.5 to 8.7%. All right, so this is the chart of SMIC. You could see, all right, just the day before, it was like taking new highs, a year high, breaking above the new highs. And today, after the news, it fell quite sharply. Well, a lot of analysts are quite bearish after US ban Huawei, because the Huawei is a major customer of SMIC. But for me, I am positive about SMIC. If you have been to my seminar, I've always been bullish on SMIC. I've always said that this is a company that one day will meet the needs or produce chips to meet the demands of technology company in China. And this perhaps could be one day, could be the Intel of China. All right, we don't know. But the way things are going with US banning China from using its technology, China will have to be self-sufficient. And that is why company, the SMIC, will one day produce enough and also be self-sufficient in their technology to provide the needs of Chinese technology companies. Well, another stock I want to talk about is Alibaba, and Alibaba is scheduled to report their 4Q results on 22nd May, and this is this coming Friday. So this coming Friday is a big day. And also, I'm bullish on Alibaba because today JD.com results was good, was in fact very good. It beat analyst expectations. And I think we could expect more or less the same thing coming from Alibaba. And that is really because of the online experience advantage that it has over other companies during the COVID-19. So watch out for Alibaba, all right? I think it should be strong from now to Friday to its earnings report day on the 22nd. And I urge everyone to be watching out for Alibaba. So this is the chart of Alibaba. I think short-term wise, it could hit resistance of 207, but the result is good. It could go to as high as 211. All right, so I believe there's some upside for Alibaba here. And, in the next couple of days, if Alibaba pulls back to support at 200, perhaps that's a good time to get in. But I believe the near-term target for Alibaba should be 207 and 211. But like they say, they never bet on results, all right? But I feel that from now to Friday, Alibaba will be strong. And if you don't want to bet on results, you could, if you make money, you could sell even before the results. All right. So there's something else that is proved to be bullish on Alibaba, and that is the news about Hang Seng going to revamp its index. The Hang Seng index, right, has not been revamped for the past 50 years. And so there's talk about the Hang Seng going to revamp their index to include dual-class shares, secondary listings, and even potentially allowing Chinese giants like Alibaba to go into the index. So that is why there's some optimism that will go into Alibaba with this talk about the Hang Seng going to do a revamp. All right. So the other potential stock that you should be looking at, like JD.com and Meituan. So these two stocks, right, could also be included into the Hang Seng Index. And particularly, I want you to be also watching for JD.com. JD.com is seeking a dual listing now in the Hang Seng Index. JD.com is currently traded on the Nasdaq, and they are seeking a dual listing on the Hang Seng. And going by the example, all right, of Alibaba, investor who took the bet while Alibaba was still trading in the Nasdaq, all right, and have bought it, made quite a huge upside, all right, when it was listed on Hong Kong Stock Exchange. All right, so the other positive for the Chinese market is the National People's Congress, which is coming this Friday, 22nd of May, all right? So that is a very big and significant meeting for the Chinese politicians. And that is because, all right, it is going to be at this meeting that a lot of major decision is going to be made. In fact, this meeting was supposed to be held a couple of months back. Because of COVID, it was postponed until 22nd of May, which is this Friday. And many people are expecting that in this from this meeting, we could see the Chinese Communist Party announcing some very significant stimulus program. So that is why from now, this week is a good week to be bullish on the Shanghai Index or the China A50. All right, so possible stimulus we are looking at to stabilize the market, the Chinese market. All right, the other thing that that caught my eyes was this article that I read in the newspaper. It says that Hong Kong, Macau, and Guangdong considers way to create a travel bubble for easier movement across borders. So what it really means is that we could be expecting the borders to open, right, between China, Hong Kong, and Macau, and that will increase business activity in these countries, and that may cause the stock market to go up. And if that is the case, well, look at all this. These retail stocks could benefit, especially the luxury brands. All right, so if Macau reopened to China, casino stocks like Galaxy and Wins could benefit. And if Hong Kong's opened its door to the Chinese market, all right, look at the luxurious retail brands like Sasa, like Chow Tai Fook, like Prata, and like Samsonite. All right. So these are the interesting stocks to look at if China open. All right. So let me just talk about gold. And if you guys been following my work, all right, I have been bullish about gold since 14 June 2019, and that is where I predicted that gold will break out of its 6 years downtrend. Okay, if you look at this line here, all right, so this is a 6 years downtrend. Gold has been going up on 6 years, and when gold was doing 1340, I predicted that gold will break out. And see what I said here. I said gold have tested this resistance line 8 times since 2016. The resistance is getting weaker and the supply is running out. All right, this is price action reading. Okay, and in a couple of months, all right, gold will be poised to break through this trend, and when gold break above this trend, this could be the start of a multi-year bull run for gold. And that is why I predicted here that the time to break above is soon. Here, I accumulated betting on the breakout. A lot of my students and my followers also bought here. And when gold finally broke out, that was the start of a mega gold bull run. And just yesterday we saw gold broke the 7-year high, and I still think gold mega bull run will continue. And just looking at this chart, a lot of funds are pouring money into the gold ETFs. All right, and that is why you could see the gold ETF also taking new highs. All right. During the 211 and 211, during the last gold rally, it was really led by China and India. But today, because of the recession and because of the difficult economic environment that India and China found themselves in, people are jobless, and the consumer demand is not great, and that is why we saw that the demand of gold in India and China has taken a tumble. So a lot of people would expect that with this weak demand coming from India and China, gold prices would have dropped. But on the contrary, we saw the gold prices getting even stronger, and that is a sign of strength in gold. All right. And in fact, if gold is measured in other currency, it would have broken above its all-time high. And only in the US dollars, all right, because the US dollar is currently very strong. And if you measure it by US dollar, it hasn't broken the all-time high. But if you measure it with sterlings, euro, or yen, it has technically broken above its all-time high. And another bullish signals about on gold is this. During the 2016 gold bull run, all right, the net futures open position on gold was very high. But today we still don't see that frenzy buying on gold in the futures market. And that is why I believe that this mega bull run still have some legs. All right, on 13th of May, when gold was trading round about 1600 or so area, I said, watch here, gold could be breaking out soon. And after gold broke out of this wedge formation, it went up for consecutive 4 days in a row. All right, and just today, it broke its 7-year high. Okay, so that was a prediction that came through, short-term prediction that came through. And in today's seminar, all right, this is something that I want to share with you, my secret trade plan, all right? So this trade plan has been fabulous, all right? It has been amazing. And I have followed it. My followers have followed it, and we made a lot of money on it. And today I want to share my trade plan. So this is where I spotted the gold breakout here, all right, here at 1400. And that's where, I called a multi-year gold bull run. And you saw gold following this trade plan. It hits here around about 1520. It pulled back, and just today it went to as high as 1762. All right. So this is where 1755. This is where my trade plan says there could be a resistance. All right. So that is why today I'm selling a lot away my gold. Still believing the mega bull run is on the way. It hasn't stopped, but I could see a pullback. And when it pulled back round about to perhaps 1700, I wish it comes to 1587. All right, 1587 would be a fabulous buy. But any correction of gold from here would be a good buy. And well, the next breakout, right? The next breakout of gold, we could see gold heading towards 1800 and taking its high at 1900 here, all right? So this is the gold trade plan. But eventually, I believe that gold, perhaps before the year end, could hit close to 2004. All right. So when gold was here at 1004, and I was telling people that it will hit 1007, a lot of people could not believe it. I'm still holding the gold from since it was I bought it at 1004. I can see a lot of my followers also holding it at 1004. We are sitting it through, and we are sitting it all right with a belief that one day it will go to 2004. And you guys have seen in this current environment how the central bankers of the world has been printing money, printing paper money in a fanatical way. All right. Today, we have the Fed and the Treasury coming together, putting together close to 6 trillion worth of monetary and fiscal stimulus. All right. So this is the perfect environment, all right, for gold to advance. All right, and gold also advance in a negative or zero interest rate environment. All right, so these are the environments that is good for gold. So I want you guys to be watching out for gold, and on every pullback, it is a buy opportunity. All right, so this is my trade plan, And so this is one of the gold stocks that I'm fond of. All right, take a look at it. Wheaton Precious Metal, read about it, and look at the charts. And this is the end of my presentation. I hope you enjoy it. All right, I hope to share with you more at the next RHO Market Chat next Monday. Goodbye. Thank you.